What is a chart? Well, let's find out. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the bobblehead that is the Scruffy trader. And what I'm trying to do with these videos is kind of put trading in the real world. Maybe show you a trick or two along the way. So if that sounds good, please click that little subscribe button, share the video, like the video, all that good stuff. Genuinely motivates me to do more of this and helps the channel. So, what's the question? What is a chart? Well, surely we all know what a chart is. But if you're new to Forex and new to trading, these are the questions that are very rarely answered. So I'm putting together a playlist of what is. And they are simple questions driven by you guys. Drop it in the comments below, email me, whichever, and I'll try and put it into a video of a single topic on each one to keep them punchy. And we started with the basics. What is trading? So that's there. But trading needs something to work with, and that is a chart. So that's what we're going to look at today. And then as we go through, it'll be all the different elements, and you'll be able to piece together how this all works. So what is a chart? Well, a chart essentially is just a glorified graph, and it is shown the price movement in a visual representation. What you're looking at the moment is called a candlestick chart, and you can expand it, crunch it up, do all sorts with it. And pretty much every broker will do this. So as you see, you can crunch it up and you can see more information of what's going on. You can read the chart. You can zoom it in so you can get right into the nitty-gritty and see exactly the turning points. But this is on what's called a time frame. And the time frame you're looking at this moment in time is 1 hour. You might want to look at a higher time frame. You might want to see an investment portfolio across a few months. So you want long term, and that's what this is for. So there's your monthly. It looks identical. The difference is the time, because each candlestick represents the time frame's single item. In other words, each candlestick represents 1 month. If I drop it down to weekly, looks exactly the same, but each candlestick is a weekly. Same with the daily. Each candlestick is a day, and so forth and so forth. Very, very simple. All right. So if you are looking to trade in the next 10 minutes, do you really want to be looking at a monthly chart? No, you want to see what's going on in the here and now. So you might look at an hourly chart to get an idea of what your trades are, because you're looking to see what's going to happen in the next sort of 10 minutes, 15 minutes, whatever you choose. So you can see straight away, well, that's moving down. So if it's moving down on the hourly, is it reasonable to assume that it may be moving down on the 15-minute? So what you would do in this case is you've taken a bias from the higher time frame and you're applying that bias to the lower time frame. So as you've just seen, we said we think the market is going down. Well, when you're looking at the 15 minutes, God only knows what's happening, because that looks like it's going sideways. But you have a bias in your mind saying down, so you will be waiting for the price to get to the top, sell high, and then sell down, and then there is your candle moving down, and then you use the chart to help target yourself, and that could be structure points, because there's a structure point there. You can see where it's all bunched up, it's got to a low point and then come away. So you can draw a quick line in there, and now you could think, well, I think the market is going down, but where will it react? At the structure point. And if you move that across, you can see it's reacted at this point before. So for the price to move from there to there is quite a reasonable assumption. And that's what you use a chart for. You use a chart to formulate an idea and then execute that idea through market orders, etc. Okay. Now, I have this set up in white. You don't necessarily have to have it in white. You can have it in any color you choose. I also use an MT5 broker, and this one is in black because I do trade Forex and multiple assets full time, and this is what I trade for a proprietary firm. I'm a trader for the 5%ers, okay, and they pay me quite well. And then this is my own funds, okay. So what's the red and green? Well, if it's green, it means it's going up. If it's red, it's been coming down. That's the color format that I have on here. Now, you don't necessarily have to have it that way. You can design these charts any way you like. Just your own personal interpretation and what is visually pleasing to you. So for argument's sake, this is a candlestick, you can see. You could also have it as a Heikin-Ashi, which is very similar to a candlestick, as you can see in the way that they are made up. As we go through this series and you ask more questions, I'll explain the differences more against candlesticks, Heikin-Ashi, H-lock, line charts, etc. Okay. As I've just said, there's a line chart, which pretty much is just a graph, right? It's just a line following. And a H-lock or a bar chart looks like so. All right. They all tell you roughly the same information. Again, it just comes down to your own personal interpretation. So that's what a chart is, and it's kind of a very quick snapshot as to how you would use it, or what you're using it for. And then as we go through, we'll build it up little by little so you get an understanding of how these markets work. So whatever you're stuck on or whatever you're looking to find out, drop it in the comments below or email me, as I've said, and I'll be happy to help you. Genuinely will. So with all that, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.